Welcome to Explain the Charts. Today, July 28th, 2025, we're dissecting the recent movements of Tesla, ticker Tesla, by examining both fundamental news and its corresponding chart data. Tesla has been a whirlwind of headlines, and understanding these events is crucial for grasping the stock's trajectory. First, let's discuss some of the most impactful news over the past few months and how it relates to our daily chart. A major positive catalyst surfaced recently. Elon Musk confirmed Tesla signed a significant $16.5 billion AI chip deal with Samsung. This news from early July, as reported by Yahoo Finance and Investors Business Daily, provided a much-needed boost, suggesting robust investment in Tesla's advanced tech ambitions. However, not all news has been positive. Reports indicate a new U.S. law is set to eliminate EV tax credits early, which has cast a shadow over car sales and market sentiment, leading to some shares falling. Looking back at Q2 2025, the New York Times reported falling profits and slowing car sales for Tesla, marking its third consecutive quarterly decline. Despite this, Wall Street generally embraced Elon Musk's futuristic vision, particularly his unwavering focus on autonomous driving, humanoid robots like Optimus, and the planned robotaxi unveiling in October. The NYT noted that Tesla's share price had risen approximately 50% since early April 2025, indicating that investors were, at one point, buying into the long-term AI narrative more than the short-term auto sales figures. Let's zoom into the daily chart to see this historical price action and how it's impacted current levels. Notice the impressive rally starting from around March 2025, where Tesla was trading near $220, climbing steadily towards the peak of $362.89 in late May 2025. This ascent clearly reflects the market's enthusiasm for Musk's AI and robotaxi vision, driving the stock up significantly despite the underlying auto profit concerns. The subsequent sharp decline we see in early June, where the price dropped from $362.89 to $284.70, a nearly 12% drop in one day, directly correlates with the increasing concerns about slowing EV demand and profit margins highlighted in the Q2 earnings. This rapid sell-off illustrates how quickly market sentiment can turn when reality hits even the most visionary narratives. Since then, Tesla has been attempting to find a new equilibrium, navigating between the bullish long-term prospects and bearish immediate challenges. The bounce we observed towards the end of July, reaching $316.06 by July 25th, suggests some recovery, potentially fueled by the Samsung chip deal news. Current reports for today, July 28, 2025, indicate Tesla is trading around $317 to $324, showing a positive start to the week. Now, let's switch to the 1-hour chart to get a more granular view of the recent price action, specifically from mid-July. You can clearly see the volatility that has defined TSLA's trading recently, with significant swings driven by new information and market reactions. Observe the strong downward pressure around July 24th, following the Q2 earnings report, which saw the price plummet from highs around $330 down to the $300 to $305 range. This hourly view underscores the intensity of the selling pressure post-earnings. However, immediately following that sharp drop, we see a notable rebound, pushing the price back above $315. This swift recovery on the hourly chart demonstrates strong buying interest at lower levels, suggesting that dip buyers like Cathie Wood, who was reported to be buying the Tesla dip, are actively accumulating shares. This rapid bounce from the lows indicates a degree of resilience in the stock, as bullish investors continue to believe in its long-term narrative. Moving to the 15-minute chart, we can gain even deeper insight into intraday price movements and immediate reactions. Let's focus on the period from July 24th to the close on July 25th, capturing the immediate aftermath of that major earnings-related drop. The chart highlights intense selling pressure early on July 24th, with candles rapidly falling from the $330 range to below $305, characterized by high volume. This shows massive supply hitting the market as investors digested the negative earnings news. However, as the day progressed and into July 25th, we see a gradual consolidation and an upward grind, indicating accumulation at these lower price points. This short-term recovery is marked by smaller, more defined candles, suggesting a battle between buyers and sellers, with buyers slowly gaining control. The ability of Tesla to quickly recover some of its losses on these smaller timeframes suggests that key support levels are being defended by long-term investors or those reacting positively to the Samsung deal. Traders should note that significant volume on sharp moves often indicates strong conviction, whether bullish or bearish, and should be watched closely. For Tesla, key price levels to monitor include immediate resistance around $320 to $325. A sustained break above this level, ideally on strong volume, could signal a move towards the next resistance zones at $340 to $350, and then the may peak around $360. On the downside, critical support can be found in the $280 to $290 range, which held during the early June sell-off. Below that, the strong support level around $220 to $230 from earlier in 2025 would be the next major line of defense. Reasons to be bullish on Tesla short to long term include the continued investment in AI, robotics, and FSD technologies, exemplified by the Samsung chip deal, which could unlock new revenue streams independent of traditional EV sales. The upcoming robotaxi unveiling is a significant event to watch, as positive developments there could reignite strong bullish sentiment and a fresh rally. The company's history as a stunning multi-bagger further supports a long-term bullish outlook for those with patience. Conversely, reasons to be bearish include the ongoing slowdown in global EV demand, intensified competition from companies like BYD, and continuous profit margin pressures. The dire prediction from some analysts like Motley Fool's suggestion of a 70% plunge cannot be ignored, although it represents an extreme bearish outlook. A sustained breakdown below the $280 to $290 support would reinforce a bearish stance, potentially targeting the $220 to $230 zone, signaling a lack of confidence in the short-term outlook. Long-term, market performance will largely hinge on the successful execution of its AI and autonomous driving initiatives, proving they can offset declining EV margins. Watch for any further announcements regarding FSD progress, Optimus deployments, or robotaxi services, as these are the primary drivers of future growth and investor sentiment. Conversely, any delays or setbacks in these ambitious projects could lead to significant downside pressure, so keep an eye on official company updates and Elon Musk's statements. Unbiased predictions suggest that if Tesla can maintain its current rebound above $310 and break past $325, a retest of the $340 to $360 range is likely, with about a 60% probability given the recent positive news and dip buying. However, a failure to hold $300, possibly triggered by broader market weakness or more negative EV news, would make a retest of the $280 to $290 support very likely, with about a 55% probability. The ultimate direction will be determined by whether the market prioritizes the futuristic growth story over the immediate automotive sector challenges. Thank you for joining us on Explain the Charts today. We hope this analysis helps you make more informed trading decisions for Tesla.